Today could be the start of a new chapter for Bitcoin, and I honestly think that today or tomorrow or the next day might be a moment that we look back on in the future in years to come as the time when everything changed for this bull run. Hello and welcome back. It has been another blistering morning for markets after a great start to the week yesterday. And as I said in the intro, I honestly think this might be a pivotal moment going forward and something that we can look back on in the future if things play out the way it's looking like they might. Bitcoin currently sitting at a price of $65,900. We are up at the time of recording nearly 11% from the lows put in just a couple of days ago. And I want to start the video by focusing on some technicals. This isn't usually a big part of my thesis, but we do find ourselves at some very key levels, and I do think it makes sense to pay attention to that. So first and foremost, yesterday afternoon we broke $64,500. Why was that price point important? Well, it was important because it was the nearest place of resistance on the chart, and that marked a breakout of the downtrend that we had been in since the end of September. Let me break down what I mean for you by that. So if we take this high here from the 27th of September, the market then moved down and put in a low here around about the 3rd of October. Then we put in a lower high around the 7th of October. Then we put in a lower low around the 10th of October. So high, low, lower high, lower low, and that is technically speaking a downtrend. So in order to break out of that downtrend, we had to break this level here, $64,500. So box checked. That was done yesterday afternoon, and we broke through that level fairly aggressively, I'd say, to the upside, although not to the degree that it wouldn't be sustainable, and quite clearly we have continued to move up from there. Now the next key level to the upside was 66,500. This, apart from being the nearest point of resistance to the upside, is also important from a technical perspective, and if we zoom out a little bit we can see exactly why. If we take a trend from the lows put in on the 5th of August, we can see the low here, of course, then we put in a high, then we put in a higher low, then we put in a higher high because we beat this high here at $64,800. Then we put in a higher low, arguably on the 10th of October, just a couple of days ago. And of course, to signal a continuation of that trend, of that uptrend that we put in since the 5th of August at the lows, we now need to break this key 66,500 level. And that is what we are attacking right now. That is what the bulls are taking on as we speak. Now, if we zoom out one level further, of course, we have been in, technically speaking, a downtrend since the all-time highs were put in. As you can see, this was the all-time high, then we put in a low, then we put in a lower high, then we put in a lower low, then we put in a lower high, then we put in a lower low. It's the same one I just described back on the 5th of August. And since then, we haven't really signaled a continuation of that trend or a reversal of that trend. In order for that to happen, we would have to break either the low from the 5th of August down at $49,000, or we would have to break the high from the end of July up at $70,000. And that is the next key point of resistance to the upside. But most importantly, it all starts with $66,500, and that is the level that we are challenging right now. Why is that so important? Well, as I say often, the market doesn't move because of pictures drawn on a chart, but taking out key levels like that to the upside, signaling continuation of an uptrend, is essentially a signal to the market that the bulls are back in control. And that change in sentiment can really change everything for the entire crypto market. So is this move sustainable? Well, there's been a lot of chop in the markets lately, save for the last couple of days, and that is all driven basically by leverage. That is leverage long positions getting stopped out, i.e. liquidated to the downside, and it is leverage short positions getting stopped out, i.e. liquidated and forced to buy to the upside. But what's been special about the move over the last couple of days is it does seem to have been driven by spot buying. We can see that by a number of different metrics. One of the ones I like to look at is the liquidation heat map. So you can see within the last 4 hours, been around $11 million worth of short positions liquidated, BTC short positions, and then in the whole crypto market over the last 4 hours, around $27 million worth of short positions liquidated. Over the last 12 hours, around $100 million worth of short positions liquidated. Now, in the grand scheme of things, those really aren't particularly high numbers. You can sort of see this in the chart as well, the way that we have moved up. Okay, it's been fairly relentless buying, but the market hasn't been wicking, right? We haven't been whipping up and whipping down. It's kind of just been this steady bid. And that is a good thing for the sustainability of this move, because if a move is driven by spot buying, it means basically that the participants are much sturdier to short-term changes in market sentiment, small market movements, and they're more likely to be able to hold on to those long positions. And that means that supply remains suppressed. And so in our supply and demand balance, there is more demand relative to supply, and prices can keep moving to the upside. Where else can we see evidence of spot buying? We can see it in the ETFs. So yesterday was an absolutely massive inflow day for the ETFs. $471 million net inflows. The last time we had a day bigger than that was back on the 27th of September. As always, spot buying led by BlackRock, with a $239 million net inflow day yesterday. And that is their biggest inflow over the last month. Larry Fink getting bullish on Bitcoin again, saying that Bitcoin will become as huge as the US housing market. It doesn't matter if Donald Trump or Kamala Harris wins on November the 5th for that to happen. Bitcoin's set to soar no matter who is in the Oval Office. He's saying here that he believes Bitcoin's growth is not a function of regulation. I'm not sure if either president would make a difference. I truly don't believe that it's a function of regulation, he said. It's a function of liquidity and transparency. Also teasing new investment products focused around Bitcoin. Quoted here, and we will continue to pioneer new products to be making investing easier and more affordable. So this is a super bullish stance, and of course new investment products on the horizon. All of that basically just means there is more opportunity for liquidity to come into the crypto markets, either directly or indirectly. The way the ETFs work right now is that when an investor buys into the ETF has to go to the market and buy spot Bitcoin in order to raise its balance sheet and back that Bitcoin that has been bought via the ETF. If we take a look at market depth here on CoinGlass, you can see that there is indeed a greater bid in the market than the ask right now, even as we do find ourselves at resistance. Essentially what we're looking at here is if you take a delta of $1,000 either way from where the price is right now, there's more liquidity to the downside than there is to the upside, i.e. more bids immediately below us than there are asks immediately above us. More people trying to buy Bitcoin at prices just a little bit lower than there are people trying to sell at prices just a little bit higher. That, of course, is a supply-demand imbalance. So if we look here, we're currently at a price of 65,900. If we go down to 64,900, we can see there is a total of 3,000 BTC on the ask side between OKX, Binance, BitMEX, and Bybit. And if we go to the upside, another $1,000, you can see at a price of 66,900 or thereabouts. There is only an aggregate sell side liquidity of 2,777 BTC. So that is the imbalance that I'm talking about. Just to wrap up, key levels to look out for. First of all, $64,500 already smashed it. We're about 3% up from there right now. Why was that important? Well, it basically invalidates the downtrend that we've been in from the highs put in towards the end of September. Next key level, which we are taking on right now, which we are challenging as we speak, is $66,500. Why is that important? Because it validates continuation of the technical uptrend that we've been in since the lows put in on the 5th of August. Beyond that, the next key level will be $70,000. That is super important because it means that we have flipped the technical downtrend that we've been in since the all-time highs that we put in towards the middle of March. Now, just to balance all of this bullishness with the bear case, I think there's a couple of things we need to pay attention to. So first of all, let me just run back to the ETFs. Now, I mentioned that yesterday was in fact the largest inflow day that we have seen since the 27th of September. Well, let's just remind ourselves what happened on the 27th of September. That was in fact the local high that we're challenging right now at $66,500. Just something to pay attention to. It might be a total coincidence, but it could also be a function of fear and greed in the market and where we are on that continuum. So if we look over at fear and greed, we can see that we are now back in greed. And again, it's amazing how fast we flip-flop right now between fear and greed. It seems to be, at least perceptively, a lot quicker than we have done in the past. The market does seem to be pretty fickle at the moment. You can also see in the derivatives market a lot of leverage, which is now very much stacked on the downside, that being leverage long positions that have jumped in the market on greed, trying to jump onto the trend with leverage, trading with money that they don't have. And of course, this does leave us open to liquidation risks to the downside where those positions are forced to close. That's what a liquidation is. The position is forced to close, it is forced to sell. And that means that they are essentially dumping on the market. Now, where that gets dangerous is when one round of long liquidations leads to a sudden price drop, which leads to a second round of long liquidations, which leads to another rapid price drop, which leads to another round of liquidations, etc., etc. That is the liquidation cascade event, which would be pretty punchy to the downside. And as you can see, at a price of $63,000, there are nearly $3 billion worth of cumulative long liquidations waiting for us. Now, that does seem like quite a way off to the downside in terms of price. It's about 4.5% to the downside. But the message here is don't be the retail idiot that bids the top on high leverage and gets stopped out for absolutely no reason. As we know, there does seem to be a sufficient spot bid in the market, and I do think we are trending upwards from here, but things are likely to get choppy, and they're likely to stay choppy as the market keeps getting euphoric like it is and keeps piling in on high leverage. So in conclusion, $66,500, the level that we are challenging right now, could be the level that changes everything for the future of this bull run and for the future of the crypto markets as a whole. As ever, stay safe out there. Don't be another retail sheep. And that is not financial advice. That's just my opinion. Thank you so much for watching. Plenty more to come. Bye.